while the SPY is getting oversold. Remember, it was like going down, 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 down. At the same time, the VIX was rising, rising, rising. So this is the fear index. Investors are buying out of the money calls here, pushing the VIX higher because of the fear narrative, recession narrative. You got the recession narrative and the inflation narrative and bad orange man narrative. You add it all up, the VIX shows that investors are frightened. So they put hedges on and they build up their VIX positions. As they build up their VIX positions, the VIX rises. And as the VIX rises, that kicks in algos to sell big cap stocks. As the VIX pops through these levels, all different levels, it triggers algorithms at all these points to sell off Amazon, Apple, Microsoft, Google, Meta, Tesla, the SPY, Qs, the Russell. These all go down as these levels get tripped on the way up on the VIX. So it starts with narrative. The narrative scares the investors. They don't want to dump their stock right away, so because of their fear, they put hedges on to protect their portfolio. Where do they do that? On the VIX. How do they do that? Out of the money calls. Well, when there's an abundance of out of the money calls on any stock or index, the market maker starts to buy blocks of it, which causes it to rise expeditiously. Gamma squares. So interesting, right? So as the VIX is going up, you got this narrative shift that inflation started to cool. Trump's policies immediately started to lower energy prices and gas prices. Just the thought that he was not going to block permits, new permits, and allow drilling and turn ANWR back on. Maybe start the pipeline again, which they did, which is all being ravaged by Greenpeace, who just got sued for $600 million. Turn on the spigot for natural gas and start exporting it again to Europe, which the Biden administration stopped. For some reason, nobody seems to know the answer why. I've asked in this room, I've asked friends, and all anyone can tell me it was more of a climate change initiative, which doesn't make any sense. So we're going to take it out of the ground. We're just not allowed to sell it. And that's what helps prevent climate change. If there's not a market for it, maybe they'll just stop pulling it out of the ground. I mean, it's just so unrealistic. Doesn't make sense. But anyway, the reversal of some of those policies and a pro-energy administration allowed energy prices to immediately go down. Have you seen your gas prices go down at the pump? I'll answer for you. Yes, they have. Inflation was cooling. And so when that narrative came out through jobs reports, CPI, PPI, consumer confidence out of University of Michigan, investors started to ease up. And you'll notice, see the wicks here leading up to Friday? That means they're starting to sell off or close their hedges. And when they close their hedges, because of the narrative that changed, the VIX starts to drop. And when the VIX drops, and again, watch this, guys, starts breaking through levels here, guess what it triggers? Algos. To do what? Buy the indexes, the big ones. Buy the mega caps. And when that kind of buying activity happens, you get, initially, right, you get a bounce. But if it's a narrative shift and they're really taking their hedges off, then the VIX starts to drop below certain levels where the bounce has legs. That's more than just a little bounce for the day, right? Literally, I gave you the levels and it happened just like clockwork. So let's go back as I was going to do before. Let's go back to, this is Friday right here, I think, right? No, there's Friday right here. Here's Friday. So Friday, when we got initial report came out Monday in the pre-market, you had a gap up. This is Thursday morning, or Thursday afternoon. Friday morning, gap and go, baby. Woo, right? And then we had a little pullback, and then that was the end of the day. Monday, we saw a continuation of that. So Monday continued to the upside, right? That's this, right? Friday, Monday, Tuesday. Now, we had some positions on, we were long. So once we saw the narrative shift, what did we do? Well, we bought the SPY. I think it was 561, 564 call vertical. And sure enough, here it is. We did see a little bit of a pullback last week, but then it shot back up. And so we were able to take profits on that. We took a JP Morgan trade. We took an Amazon trade. But here's the turnaround Tuesday. I warned you at the end of the day on Monday, take off your SPY position, take your profits now on your longs. If you have profits, take them. And so we did. And look what happened at the end of the day. Breakdown in the pre-market and then a pullback. That was Tuesday. And yesterday, it just kind of chopped around and didn't really go anywhere. Why? Because investors are nervous and they're waiting to hear from the Fed. So they hear from the Fed, okay, no interest rate cut, no cut, no raise, no nothing. But then he was what? Would you say that those of you that heard Powell or saw the report on him, would you say that he was somewhat positive about the economy and did not have fear of recession? Is that what you would say? Somewhat. Would you say it was somewhat dovish? Yeah, so somewhat. Um, well, when that came out, this dovish whatever, there it is. Let me use orange, yellow because it seems to stand out more. This is 2 o'clock in the afternoon. So again, waiting on Powell. You got a little bit of a move to the upside, right? And then straight up. So this was all Fed right here. So what I like to look at, and you've heard me say this, is what did the Fed say? I don't know. What was the reaction to the Fed? This. What was the reaction to the reaction? Pull back a little bit. Well, this is also the market maker. So if you take a look here, you see this 570 right here? As this was going up, there was an influx of out of the money call buying for zero DTE. You guys want to see it? I can show it to you. I'll show it to you. You can see just by looking at the chart, why did price come up to here, stop here, and then drop from here and stay right in this box, finishing right about here, 568. Well, there's a good reason for that. And I'm going to show you what it is. Here's the SPY. So look, this is really crazy. But if you look at the call side, what is the highest number here? And all this volume that came in. Holy cow. That is a lot of volume. There's a lot of volume on the put side too. But if you look at 570, it's over 315,000 calls. Yowza. Yeah. So they just wanted to, make sure that, you know, and if you look at all of this, right? All of this gets destroyed. 568, that means, you know, all of these puts are out of the money, including the 568. So all of that gets wiped out, right? And all of that, yeah, it's kind of like Max Payne. And then all of that gets wiped out. Now, they already had a good way of slicing out calls and puts throughout the day, going up, going down, going up, going down. But you can see they drove price up to destroy all of this, but didn't quite get to 570. And before it even got anywhere near 570, look at this. Look at this, guys. Literally right there. You see it? Pretty clear, right? Ken knew it was going to happen because he looked at, you could see it. Right, Ken? Holy cow. So if you were hoping for this, you weren't paying attention. So this does not mean something bad happened in the market. It doesn't mean, it lost momentum. It literally just means in the last 45 minutes to an hour of the day, the market maker did what they needed to do to kill off as many calls and puts as they did, and that's what they did. But the move was positive. Now, there's a few things about this move that I don't like. The first thing that I don't like is that the dollar stayed flat, which is really surprising me because if there's, some positive news in our U.S. economy, you would think that investors would flock to the dollar, but they're not, which means foreign investors are not buying the narrative. That's number one. And if in fact the dollar could rise along with the markets, what you would see is energy, big cap stocks, banks, software, semiconductors, would all go together. And then you'd really get not a full rally, but you'd get a really fierce rebound. But you got to get the dollar involved. It did not. Also, yields didn't come up either. Odd. You would think if there's less fear of recession, then yields should just continue to go up. No fear of inflation? Pump the yields. So why didn't yields go up on that news along with the SPY mega caps and all of the buying that happened as the VIX, dropped? So I don't have the answer to that question. I don't. We got below 20 on the VIX, right? Which is VIX 20, very significant. You got big time buying of over 2% on average of the big caps. So you got buying. Yes. These are the things we were looking for, right? Coinbase was up 7%. These are all the things that we've been watching. Bitcoin was up. JP Morgan pushing higher and higher. What a great trade that was. And by the way, this is a trade that we did here in Masterclass, but we did a different version of it in Legacy, and I'm going to share with you that strategy tonight. So don't go anywhere. JP Morgan, pretty big indicator. Goldman Sachs is not the indicator any longer. I didn't hear if they said that they were selling less bonds or what, but in any event, I wanted to see the dollar and I wanted to see yields climb, because if they climb, that's part of my narrative. And without this, this bounce seems a little sus, a little suspect, a little sketchy. Sketchy. Is it cheeky or is it sketchy? Well, we'll have to see. I think it's a little bit of a cheeky market, perhaps. I don't know. No, not buying it. Not buying it. Cheeky little monkey. So, for those reasons, and waiting to see the reaction to the reaction, what happens tomorrow morning, is there any reason that I have to jump on this moving train? Do you really want me to load it? Well, Michael, why didn't you buy like NVIDIA calls and Meta calls and ARC calls? Look at all the money we would have made. Okay, that's true. And what if we gap down tomorrow? Well, there's all your profit. What if we go even higher? Okay, we would have made some money. That's true. But I don't have confirmation of this setup. Yes, you got green on the screen, but that's not enough. I want to see the reaction to the reaction. And there's a lot of stuff going on domestically. There's more executive orders. There's more judges trying to stop Trump's agenda. He might back off on tariffs in order to bring out the tax cuts things, which is what I thought he should have led with, not tariffs. But there's a lot that could happen tomorrow. And, if I had gotten a move in the Dixie and if I got a move in yields along with energy and everything else, and then a little pull to that, I could see myself adding to my positions, which I don't have a lot of. But because of the uncertainty, I took my profits in JP Morgan. Oh, man. Michael, were you loaded on JP Morgan? Because we had Masterclass and Legacy. That was a great trade. That was one of those yowza trades where you step on the gas. Kind of a no-brainer. And there was a lot of ways to do it. Yeah? Cool. So I'm going to sit tight for now. I'm going to see what happens tomorrow and let the charts lead me. So for right now, the narrative, and I'm going to share with you the 10 steps to successful trading next. So the narrative right now, recession, meh, as my son would say. Inflation, cooling. That's the narrative right now. Tariffs, taking a back seat at the moment, as really the focus is more on retaliatory tariffs. Not like, we're going to just tariff them because we don't like their accents. Are you going to tariff me You son of a bitch. Yes, James. We're gonna tariff your corrupt EU. So we'll see. For right now, tariffs kind of backseat to the recession fears, kind of a little bit going away potentially. Inflation cooling potentially. Tariffs, back it off a little bit, back it off. So that's the narrative. And that narrative gives just a little more certainty that we might be okay. And if that happens, then the VIX hedges come off. But they could put them back on in a heartbeat. And you will know. Because right now the VIX is below 20. If the VIX gets back above 20 and then back above 23 again, it's game over. You're going to see the next rollover. What would cause hedges to come off, hedges to go back on and VIX moving back higher again? Change in narrative.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.